Alrighty, as promised, here we have now part 3 of chapter 1 summary. Okay, and at the beginning of the semester is going to be very important that we understand these concepts. Hopefully, these videos won't get so long that you'll have to have so many parts, and that it'll just get better for you. Okay, and I'll just be doing video summaries instead. All right, so here we have then the financial statements, the 3 of them. Okay, so we have the income statement also. Okay, so we showed the balance sheet, we have an income statement, and we also have the owner's equity that's going to be coming up. Now, the income statement is just that. It gives you the information concerning only revenues and expenses and whether or not you made a profit or a loss, or a net income or net loss. Okay, it covers a period of time, either a month, a quarter, there's 4 quarters in a year, or the entire year. Okay, and this is what you get off of the accounts from the balance sheet on the ending dates, and you create this. But like I said, the only thing that you're going to be using for the income statement is just the revenue and expenses, whether or not you made any money. Okay, so for any of the statements, you're going to need to make sure that the company name, of course, is on it, that you're going to have the name of the statement and the period that it covers, from what time to what time. Like, for example, since we've got the any month of the year, let's say it would be January, from January 1 to January 31st, the end of one semester. I mean, 1 month. If it's going to be a quarter, then whatever that quarter is. Okay. If it's going to be the end of the year, then it's going to be from, let's say, January 1 to December 31st. Okay, so that's what we're talking about as far as the period that it covers. And this is what we're talking about. This is what it looks like. Remember that Mia Wong went ahead and ended up having $5,000 worth of legal fees that she brought in. Notice this is for the month ended of September 30th. So here you go, $5,000. Then she had a $700 salary expense. She had the $400 of the rent expense, and then she also had the $200 of the advertising expense, bringing the expenses to $1,300. So then what you do is you end up taking the $1,300 and you subtract it from the $5,000 of the money that she made, that she brought in, not from the cash account, from the money that she brought in for that month. And she ends up with a net income of $3,700. And of course, at the end, when you've got your total, you put 2 lines underneath it. So here she's showing that she made a net income, not a net loss. If her expenses would have been more than the $5,000 that she made, she would have ended up with only the she would have ended up with a net loss. Okay, so the next one is, as I stated, the owner's equity. It's the investment of the owner, how much they made. So here we go. We have the net income, which is the revenue minus the expenses, and then of course how much we have as far as the withdrawals, whether the owner's equity, either they made money or they've lost money. Okay, how much money they've invested plus how much money they've made as far as how much they're entitled to, based on the net income of making money or not making money. Sometimes they have to add more money in. And typically for a new starting up business, unless it's changed, the government gives you about, and yes, the government regulates these businesses very carefully because of businesses that come up that are false businesses and they're just doing money laundering. The banks have gotten stricter also because the government has gotten stricter on the banks as to making sure that there is a true business going on. So in this, you have now the equity of the owner, the statement of owner's equity, meaning you show the net income here minus any of the withdrawals. And she took some money out. She took $100 out. So there was an increase in capital of $3,600 because that's how money she brought in based on the revenue and based on the ending balances of the income statement, how much money she had left over after expenses. And then, of course, so she has an increase in capital. So now you add the $3,600 and the initial investment. So you show as of September the 31st of an increase of owner's equity of $9,800. Great, because of revenue, okay, money she brought in. Now, one of the things that the owner wants to make sure, especially if it's a sole proprietorship, is how much they're going to, if they're going to withdraw anymore or if they're going to reinvest in the company based on what they need to have. And they also have to consider, and that's why you also have a budget that you prepare as to, okay, what are my expenses going to be? Just like anybody should, making sure that you've got a budget as to how much you should have, how much you should not have, okay? Or how much you should have at the end of the month based on your expenses. What do you need to, as far as not have, as far as if you went overboard with the expenses, especially over any holiday, and especially the end of the year holidays, how much you ended up spending as done now, how much you owe on account, and how much you need to go ahead and start paying off. If they had made a loss, if there had been no money come in, an example, then all you would have done is shown the net loss, the withdrawals. Let's say that there would have been a net loss of $400. Then guess what? She would have had a decrease in capital, okay? And it would have brought everything down. So again, the differences between making money and not making money as to how much equity you have, how much right you have to the business. So when you're looking at the accounting equation, notice, remember, we go back to the balance sheet. We have the cash, okay, the accounts receivable, the office equipment, your liabilities, your accounts payable that you've got, and then, of course, your equity. Now you're bringing in the balance sheet of how much money you got at the end of the month. Her capital now, because it's increased, okay, it's increased, so that you have the total of $10,300. Notice everything balances out based on the spreadsheet or that workbook that we had for the month of September, okay? So what goes on each financial statement? Income, just revenue and expenses. Owner's equity, capital, beginning, capital, ending, and then end withdrawals. Balance sheet is the assets, liabilities, and the ending capital, okay? So again, if there's any additional investments, it goes on to the statements of owner's equity. Any additional money that they put into the business or any equipment that was brought in. Okay. So the main elements, again, the income statement is prepared first. We're going to get into the trial balance as well, but for right now, when you're doing financial statements, the income statement is made first, wanting to know whether you made a net loss or a net profit, then owner's equity, then the balance sheet, because from the income statement, you get your information for your owner's equity, and then from the owner's equity, you get the information, and income statement, you get the information for the balance sheet for the month ending, whatever day it is that you prepare it, all right? So we've gone over all of this. We've gone over what a business is. We've gone over how the businesses are set up. We've gone over this main that's coming to me, equation. That is the basics of everything that we're going to do. We've gone over what a liability is, a capital, what does it, that is not just cash, how a shift in the assets changes the total, it changes as far as how much you've got, but it doesn't shift the entire amount at all, meaning that you've got them broken up, your cash, your accounts receivable, as we saw before, all of that we had. We went over everything else as far as the revenue, owner's equity, preparing everything. So this is the end. Now what I'm going to do is go ahead and provide you a demonstration of what your assignments are going to look like, okay? Meaning, it'll be in your book so that you can see it, but I'll go through it so you can understand what you're going to be doing for your assignments for homework. I'm going to demonstrate that for you. The other thing that you need to remember is that if you have any questions, you need to email me or you need to text me, or I'm also going to show you later on, there's going to be another video on letting you know that on Sundays I'll be available under Google Hangouts. Just in case you have a question, you want to see me face to face, and sometimes through chat or through the texting, if it doesn't make any sense, then I can suggest that we get on Google Hangouts so we can understand what's going on. Okay? So again, this is the entire chapter now that we've done for chapter 1. Don't hesitate to ask me questions, especially before the homework is done. And remember, the homework is due on at the end of every Sunday by 11:55. Okay? And I'll see you guys on the flip side.